What that means is that the investor who's underwriting the loan is going to underwrite it, going to and send closing documents out. So there can be a loss of control there that could be really important, particularly on touchy situations or on purchases. And Jeff, the third model that I think is pretty darn good is a correspondent mortgage banker. And that is a hybrid model, and I say it's the best of both worlds. And what a correspondent mortgage banker does is they lend their own money. So not only does a correspondent represent many national banks, and frequently it's the same big banks that are on the corners, but they process the loans in-house, they approve the loans in-house, and they send the closing documents and check the closing right locally from their office. So for instance, in our case, that's Chapel Hill or Raleigh. But it could, depends on where the correspondent banker is from. So the important thing for a borrower is control in the process. The other aspect that is important for the borrower, though, Jeff, is that because our investors are only sending a send your new mortgage payment here letter to their customers, they always give us the absolute lowest interest rate. So there's a competitive advantage there also. So that's the three mortgage banking models that it's important for consumers to be aware of.
Okay, great. Well, if a consumer is looking to purchase a home or even refinance, where should they start the process?
It's really important to start really in the planning and in the thought process. So there are a lot of moving pieces to a mortgage process actually during the assembly line process, but outside with the consumer, it really begins with understanding where they are right now in their life and where they'll be in the next 5 to 7 years. So for instance, Jeff, sometimes buying a house and getting into it with the minimum down payment is important. Other times, if there is, for instance, a lot of debt, for instance, student loans, I see a lot of student loan debt, sometimes the